Hello everyone, welcome to the IchimokuCharts.com daily analysis for light sweet crude oil for Wednesday, May the 4th, 2011. Well, a continuation of the trend to the downside today with a candle that's made a lower high and a lower low. Once again, this area that we've highlighted in yellow is held as resistance for this market. That was a previous window that was opened quite some time ago when the market fell substantially. And that window was held as resistance for the second time. We can see the first test here and the second test here. A fairly bearish candle, a red-bodied candle, but the size of that red body has become slightly less than the previous day's trading. That suggests that even though the sellers have made net bearish progress, they've made a lesser amount, and that doesn't necessarily support continuation of the trend to the downside. However, it's only not a very strong signal to suggest that there will be a change of trend to the upside. We do have the market closing only just below the midpoint level of the range, and that suggests that the sellers closed the market in control, but it was very weak control. Now, we did have some loss of commitment by the sellers, however, and we can see the shadow on the bottom of the candle, and that was as the market tested support at the Kijun-sen, which is at 108.76.5. And we can see that the buyers came in around that area, and quite often the Kijun-sen or Tenkan-sen or the cloud will act as an area of support or resistance, and in this case support. So that area becomes very, very important for this market over the next trading day. If the market does continue trending down, then there is potential support offered at 106.95, and then down to the swing low roughly around 105.30, and there was good solid support down around that level. Now, in Ichimoku charts terms, we are trading above the cloud, so the market retains its overall positive bias, trading above the Kijun-sen, so bullish in the medium-term time frame, but bearish in the fast-term time frame by trading down below the Tenkan-sen. It's been a few days since the market's been trading down below there, a couple of weeks. So that makes the potential support at the Kijun-sen very, very important. If the market does trade down below there, then we'll be bearish in two time frames and may test down to lower levels. If we do see a change of trend to the upside, however, we do have this very strong resistance offered within this window, which extends from roughly 110, 109.75 up to about 115, so just above 115. So that's a very important area, and the market will need to build some good solid momentum to the upside if we are to trade up above there. If we do trade above 115 in a bullish way, then there isn't any decent resistance until we trade up to about 120. So we could see good price appreciation if that happens. Now, just looking at the characteristics of the trading over the last 3 days, some decent sized red body candles compared to these candles around here, which are all fairly small bodied candles and a mixture of green and doji type candles. So a lot of indecisive trading within the window, but very decisive bearish activity as the market was rejected from that area. So that could be significant for this market, actually attest to how strong the resistance offered within this window is. So obviously watch the area down around 108.76.5 and the low, which is around 108.50 for a potential continuation of the trend to the downside. But certainly do look for the potential higher high. Watch the high of the current candle and any potential test up to around 115.